The Federal Reserve opted to keep interest rates steady at 4.5% yesterday. This decision came as no surprise to most economists. However, the Fed's accompanying statement and Chairman Jerome Powell's press conference painted a cautious picture. The elephant in the room? Tariffs and their potential to derail the economic recovery. Powell stressed that the Fed is closely monitoring the impact of tariffs on prices. He acknowledged that tariffs have already contributed to some degree of inflation. The big question is whether these price increases will be temporary or morph into a longer-term headache for businesses and consumers alike. Powell's comments on tariffs were particularly noteworthy. He stated that the Fed is seeing some pass-through of tariffs into consumer prices. This is a significant admission. It suggests that the trade war is starting to hit Main Street wallets, potentially impacting consumer spending. The Fed's preferred measure of inflation, the Personal Consumption Expenditures Price Index, has been inching higher. While the Fed still believes inflation will remain close to its 2% target, the escalating trade tensions are a wild card. The central bank is walking a tightrope, trying to balance economic growth with the need to keep inflation in check. The Fed also downgraded its economic growth outlook. This is partly due to concerns about global economic slowdown. However, the uncertainty surrounding trade policy is playing a major role. Businesses are hesitant to invest and make long-term plans when the rules of the game keep changing. The ongoing trade negotiations with China are adding to the uncertainty. The Trump administration's threat to impose additional tariffs on $200 billion worth of Chinese goods looms large. If no deal is reached, it could further escalate trade tensions and have a significant impact on the U.S. economy. The markets reacted to the Fed's announcement and Powell's comments with a whiff of uncertainty. The Dow Jones Industrial Average closed down modestly, while the tech-heavy Nasdaq Composite Index eked out a small gain. Clearly, investors are trying to decipher the potential impact of tariffs on corporate profits and economic growth. Wall Street analysts are also sounding the alarm about the potential fallout from a prolonged trade war. They argue that tariffs are essentially a tax on consumers and businesses. This could lead to higher prices, reduced consumer spending, and ultimately, slower economic growth. The consensus? Nobody wins in a trade war.